In this video, we will be speaking about very powerful support and resistance levels in the market. So how to spot them and most importantly, how to capitalize on the rejections from those areas. So I suggest that you watch the video until the end because it will be filled with value and it will improve your trading. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so I got a lot of requests for this video. Many people ask me in the comment section below, Nick, show us a way in which you can properly identify structure levels, so support and resistance zones. But I will bring this a little bit further. I will show you also how to properly identify when a level is actually broken. And why is it so important to understand when a level is broken? Because as you know, in the market, previous support is turned resistance and previous resistance is turned support. So you need to properly understand when the previous resistance is turned support and when the previous support is turned resistance. So in order to understand this, you need to understand when the level is actually broken. So that is why I will be sharing with you the trick that you have to be using to understand when the structure level is actually broken, which will help you avoid most fake breakouts. So I will also share a special bonus in this video, which is I will be sharing with you the full analysis on CAD CHF. So I will also show you how to identify the next possible opportunity on CAD CHF to capitalize. So make sure you watch the full video. So the first thing that I want to share now from a daily perspective, okay, we now go on the daily time frame. Doesn't really matter which pair it is. I'm choosing CAD CHF, but simply because I anyway wanted to speak about this pair in the future. Now, what do you know? You know here that you have clearly a strong level of resistance. Let's go back. Okay, the market has hit this level here and rejected it, hit the level again and rejected it again. So this is clearly resistance, and that is how you spot a resistance level. Very simply, if you have a movement in the market and every time the market creates an impulse, at some point it will create a retracement, therefore it will be making a move to the downside. Now this move to the downside will create a resistance level. You don't have to look in the past when you're finding structure levels in the market. Just follow the moves of the market, and it's very easy. Many people make it very complicated because they say, hey, you have to look in the past. No, look at the most recent price action. The market is shouting at you, look, this is previous resistance here, and now again I'm acting here as resistance. I can even exasperate this concept and tell you, look, even ignore this one. Just look at the most recent price action. The market went up, found resistance here. This is the resistance. The only resistance level that you currently have to look at in the market. I'm a little bit exaggerating here, but just to prove the point. This is the only resistance level that you're supposed to be looking at. And the only support level that you're supposed to be identifying is the last movement in the market, which is this one here, okay? So at least at the beginning, only focus on the most recent price action. That is how you properly identify support and resistance. You have resistance here and you have support here, okay? If the market will break below this level here, this previous support will be turned resistance. If the market breaks above this level here, this previous resistance will be turned support here. And now I will now show you how to properly spot the break. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. So very quickly, we have spotted our resistance and our support, and that is how you properly spot it. Just look at the most recent price action. You can argue with me, look, this is not correct because you should look at the past. Look, try to apply this in the market for 1 or 2 months and you will see that most of the times this is the structure levels that the market likes to respect, the most recent structure, trust me. So look what happened next. Let's see what happened next. Okay, the market made a break to the upside. Now, here is where I will share with you when you're actually supposed to be looking for the proper break, how you're supposed to identifying that the market actually did break the level. Now, if you see only one daily candle closing above the zone, do not consider it a break. Okay, it is a break, but it is riskier to considering this just a break for two reasons. One candle to the upside could easily be a manipulation and the next candle closes back below, creating a fake breakout. So this could be just a trap set by market makers. Second, you don't have any confluence of Fibonacci levels because this is not really an impulse. One candle to the upside is not an impulse, but if you will have more continuation to the upside, then when the market will make a retracement back to the zone that is supposed to be turned now support, so previous resistance, now turn support, you will also have the confluence of the Fibonacci levels. So you will be able to take your Fibonacci from the low to the high of the impulse and find a proper confluences of support, also from a Fibonacci retracement perspective. So 50% or 0.618 retracement. Let's see what happened next. The market made another candle to the upside. Here is where you can consider the zone broken because you had more than one daily close above the area. The market broke the zone with a impulse. Okay, so if the structure level is broken with an impulse, it gives you the possibility to have more than one daily close above the zone and gives you the possibility to have the confluence of Fibonacci levels on the possible retest of the supposed previous resistance now turned support. That is when you can consider a level really broken and this to be turned the new support. Okay, and in fact, when the market made a retracement back to the zone, let me guess, where is the level that the market actually, which level did the market actually respect? Exactly, the previous resistance, now turn support, proving the point. I mean, this is just one example, but you can go in the past and you can test this over and over and over again. You will see that this is the most accurate level that the market likes to respect, the previous support turn resistance or the previous resistance turn support. No need to go back 10 months to find the structure levels. The market is always in evolution. Okay, so the most recent price action, that is what really matters on all time frames. So obviously on the monthly time frame, the most recent price action from a monthly perspective will be several months. Okay, so this previous support here, now turn resistance here, but that is a lot of months. But it's the most recent price action from a monthly perspective. On the daily, the most recent price action will be few days ago. So everything, obviously, you have to put it inside of the context. So in that, the time frame that you're actually looking at the moment. And in fact, we were able with students to capitalize off the bounce away from this area with a beautiful 1 to a 3.5 risk to a reward trade to the upside. But what is next? Obviously just looking at a previous resistance turn support is not a strategy. You need to have clear set of rules when you're analyzing the market. And I made the full analysis of this trade, okay, of this trade here in my previous video, actually 2 videos ago. But anyway, you find it here, I will link it here, and also I will link it in the description if you want to go and check out the full analysis of how we were able to execute this trade. But now I want to share with you how we can be looking for the next opportunity on CAD/CHF, because I also remembered that I actually forgot to give you the full analysis on CAD/CHF in the video in which I explained the full trade here. So that is what I want to be doing today. So what kind of situation we currently have on CAD/CHF, how we can be looking for a possible capitalizing opportunity on this pair. So let's start from the monthly time frame. Now on the monthly time frame, clearly the market has created a nice impulse to the downside, followed by a retracement. The retracement has reached the previous support here. It was support here, now turned resistance at this level. So from a monthly perspective, we have previous support turned resistance. Now, after an impulse, if you want to measure the retracement, what are you supposed to be doing? Taking your Fibonacci from the high to the low of the impulse. And what you can see that the market went exactly at the 0.618 Fibonacci retracement. So you have the confluence of a previous support to resistance with the 0.618, so the golden ratio Fibonacci retracement. So definitely from here you have a clear structure and confluence of resistance from which we definitely want to see the market at least try to start another impulse to the downside. Perfect from a monthly bearish perspective. We go down on the weekly. Now on the weekly time frame, what we have? On the weekly, we have a market that currently is definitely impulsing to the upside. We acknowledge that the previous support to resistance from a weekly perspective is here. The last time that the market went up is here, and then it broke to the downside. So the previous support to resistance is here, giving the possibility to the market to go higher, to actually test this zone before starting the move to the downside we want to see from a monthly perspective. So a little bit higher target in mind from a weekly point of view. We go down on the daily, and what kind of situation we have on the daily. Now on the daily, we have to keep our upside target from a weekly perspective, because we know that the market might want to go higher. What we can also identify from a daily perspective is this is the most recent structure, okay? So as we said before, the most recent previous resistance in this case, turn support is here. So this is the previous support and resistance from a weekly perspective. This is the previous resistance turn support from a daily perspective, and from a monthly perspective, we want to see the move to the downside. I know I said perspective a lot of times, but it is a game of perspective. So what are we supposed to be doing in this kind of situation? First of all, let's go and take a look at what we have from a COT perspective. So commitment of traders, what hedge funds are doing in the market. Let's get our CAD data, and what we can see is that currently we are sitting at minus 33k net positions, meaning that we have way more shorts than longs in the market from an institutional point of view. So we went from 14k to minus 33k, so from having way more longs than shorts to having way more shorts than longs on the CAD. So we can expect CAD weakness. And if we go and see what we have from a CHF perspective, we can see that currently we are sitting at 8.9k net positions. So from minus 3k to plus 8.8k, meaning that we went from having way more shorts than longs to having way more longs than shorts. And with the last report, hedge funds have added another 118 long positions on the CHF and closed 132 shorts. So strong CHF, weak CAD in the long term. So how we will be approaching this? Very simple. Until the market will remain above this support, we can easily continue to the upside to the weekly target, okay? But we're not interested in the move to the upside, because we also know that exactly here we have the 0.618 resistance from a monthly point of view. Therefore, how we will be approaching this? We will be waiting for the market to break the most recent daily structure, meaning that if the market will continue to the upside, this will be the most recent daily structure. And we will be waiting from a daily point of view to have a bearish structure. So the most recent level of previous resistance turn support be broken to the downside. Once the market will do that, so if for example the market will do it exactly here, so the next daily candle will break below this level, then on the retest of the zone with students, we will be monitoring price action from a 4-hour perspective, because always remember, monthly, weekly, and daily are for direction. The 4-hour is for entry, and there is where we will be looking for a nice short position. If on the 4-hour time frame, we will get all our rules satisfied. And as soon as the market will provide to us one of our valid entries on the 4-hour, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. The link is in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. The link is in the description, and I will see you in.